Mike Santolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this late Friday morning on April 19th. So for the first time since late October, the market has cracked its intermediate term uptrend. This week, what we call our Cabot Tides, or intermediate term trend model, turned negative. But it's really across the board. We look at the major indexes, but if it's the major indexes, it's all the sectors. It's something like 2/3 or more of all stocks are below their 50-day lines. And it's growth, it's defense, it's maybe not commodities, but other cyclicals, industrial. I mean, it's pretty much across the board. Okay, so in Cabot Growth Investors model portfolio, the stuff that we focus on, which is leading growth stocks. They kind of been stalling out, as we talked about, for a month or two. So we came into the month with a quarter in cash. I wish it was 3/4 at this point, but that wasn't realistic. And we've pared back. We're about 37-38% cash, and could go higher. We're not just going to hold on and hope. But we're also not just throwing things overboard, for the hell of it, some winners and things we've already taken partial profits in. Now, looking ahead, just from a very simplistic point of view, not simplistic, but, foundational point of view, the intermediate term trend is down. So that does favor, the odds do favor further weakness ahead here in the days, maybe weeks ahead. But the longer term trend is up, and that goes for just about everything too, indexes, stocks, sectors, so on and so forth. So when this finishes up, whether it's in a day or two or a week or two or 2 or 3 months, whenever it is, there should be at least another one, if not more, up legs to this overall bull move, okay? How you want to play it, we've talked about having a plan before. I'm not going to get into that here, but I just think overall the message is, you want to be cautious here. You don't want to be complacent. Oh, we're going to go up down the road. Don't worry about it. Hold on to these stocks. We're heading into earnings season. Make sure you have your plan in place, have some cash. I'd be limiting new buying here. I'm not saying you can't do any of it, but you got to be very choosy here. And because we just had a relatively smooth, 4 or 5 months, and odds favor, like I said, some more, correction consolidation here near term. Now, maybe this is a shakeout and the Middle East clears up and interest rates come down and earnings season is great. And I would say there's a lot of stocks because of that churning that have already been sitting around for 8, 9, 10 weeks. So if we do get going, there should be some stuff to sink our teeth into. But at this point, you have to see it to believe it. Right now, I think it's best to be a little bit more safe than sorry. Okay, let's hop into the charts, show you what I'm talking about. Using a program called Market Surge. You can learn more at marketsurge.com. It's a product of Investors Business Daily. So just, going to run through a bunch of charts here. So just with the major indexes, the crack came last Friday here, and it's just been straight down here. Now, we have gotten very oversold very quickly. And, textbook, it's like, hey, we're very oversold. If you look at like breadth measurements and even stuff like new highs, it's coming in pretty quickly. Very oversold, and a major uptrend should be, risk reward wise, maybe decent. The other way to look at that, though, is we've gotten very oversold very quickly. So there's, there could be more coming. It's kind of like when you get very overbought very quickly in an up move like back here. We'll see how it plays out. Let everyone else guess at that. I think it's just taking it day to day, week to week. The bottom line here is, for months, the intermediate term trend turned up here without, the 25-day line turned up, and now cracking the 50-day line. So it's been a good run. It's been profitable. It's been nice. But that particular run is over, and now we're still selling off. And it's not just the NASDAQ has been taking it on the chin, and like chip stocks, which we'll show you. But S&P 500, New York Composite, below the 50-day line. And then if you look at like this is the mid caps. I mean, the mid caps this month alone are down 7%, stuff like that. And then of course the small caps have been bringing up the rear for a while, and they're just kind of back in the, really almost testing the 200-day line, but really never got going, really just kind of been consolidating in here all year, okay? But again, just going through like IBD 50 index, we look at this, not updated today, so it's probably, down here somewhere, but below the 50-day line. Chip stocks, which had been the #1 growth group, really last year and this year. This spike here, by the way, in reversal was the NVIDIA spike in reversal that day. And since then, that was kind of the top. It's been topping out, and now it's cracking. I'm not saying it's going down here. Okay, again, the longer term trend is up. Here's the 200-day line way down here. But, after such a big run, odds favor. Even if we do bounce, which we could, you're probably going to get some more consolidation. Hopefully I'm wrong and we just skyrocket. I'm all for it, but, just trying to play the odds here, okay? But even outside growth here, I just picked a couple. This is XLV, which is kind of big cap sort of, I don't want to say defensive healthcare, but that kind of like big cap, well-situated healthcare, not like biotech, although biotech looks bad too, but, clearly below the 50-day line, transports, IYT, so it's pretty broad-based. There's a few things holding up. We'll see how it goes, okay? Just to run through a couple more charts. Interest rates, I know Middle East is definitely having an impact, but interest rates to me are more, obviously it's been the tail wagging the dog for a few years. Really accelerated higher again. So I don't think it's a coincidence. The market's down 5 or 6% so far this month, and interest rates are up like 40 to 50 basis points basically. So almost 0.5% just since the start of the month. I don't think that's a coincidence. So, it is what it is. I mean, if rates go up 1% from here, I mean, all bets are off. That said, let's see how it goes here. I mean, there is some resistance and stuff, but we're going to have to see, well, I shouldn't say it that way, but more than likely we'll have to see interest rates at least calm down and stop going up every week, basically, for the market to be able to get out of its own way. Okay. And last but not least, I will just to end on a little bit of a positive, like top line note. XLP we watched, yes, it's been outperforming the market, meaning like it's coming up here a little bit, but there's no big rush into defensive stocks here. And there really wasn't, at the top either. So a lot of the evidence when you look at some of the, stocks, I'll even look at NVIDIA here. NVIDIA has been kind of like one of the obviously flag bearers. It's come in here, but number one, obviously the long-term trend is up. Number two is just looking at this. Now, maybe this is the top and it's never heard from again, but, looking at this decline, it's 15% after basically doubling from 500 to 1,000. So it's gone from, 50 to 100 back to 82. We're seeing a lot of that type of action and not a lot of volume down here. Look at the weekly volume. It's not like there's been a ton of selling, huge, maybe that happens on earnings, but we're not seeing that from a lot of the liquid leaders. There's some smaller stuff that's got tossed around for sure. And so when you look at stuff like that, again, there's a lot of things playing into the fact that we're in a correction. There's probably a lot of people who were caught off guard by this down move and were kind of complacent, and that might take time to filter through the system, so to speak, in terms of selling. But we're not seeing like abnormal, the stock is down, I don't know if it pulls up, not to go on a tangent here, but this is Cloudflare back here. It's getting hit here, but my point is back here, we owned it, and the stock looked great. It had this post-earnings ramp to new highs. Now, it had a huge run the prior 2 or 3 years, big difference from this current environment. But the stock went down. I mean, I don't know what it was, but within a week or 2 or 3, the thing was down like 35%. That's like, whoa, something's wrong. When you go back to something like NVIDIA, there's a lot of stocks that look like this, which is weak here, not good, could go lower. But I'm not seeing something that says, hey, this stock is toast, forget about it. Like this, just take it off your list, forget about it, erase it from your mind. We're seeing a lot of this stuff that it's down, it could go lower, it doesn't feel good now, but in the big scheme of things, it's not the worst thing, okay? Not saying you should hold it or buy it or anything like that, but I'm just saying from a long-term perspective, we're not seeing that abnormal action, okay? Now, when it comes to buying, honestly, right now, I would just mostly not, or at least keep it small, but I always have my eyes open. I'm always running screens, especially when things are weak. So again, I kind of put them in a few bunches here. So commodities sort of on the first thrust pullback. You've had, this is Chord Energy, CHRD. It's a little small, not smaller, but $7-8 billion market cap. Very persistent advance up here. And now you have kind of the first pullback to the 25-day line. You could nibble on these things here and just hold your nose and put a stop near the 50-day or whatever. And risk reward wise, it shouldn't, it's not that bad in terms of, it's not like it's sticking straight up in the air. You could, set a limit up here and try to buy it only if it rallies further. And if it doesn't, you never buy it and use some sort of stop. Or you could just do nothing with it and just watch it. But we are seeing some of these first pullbacks. And if you're interested, maybe you didn't buy any commodities, whatever, a month ago or something, maybe you want to try to take a shot at them towards support. Southern Copper, not exactly the same setup here, but just copper stocks very strong, and just kind of a nice, really longer term breakout a few weeks ago. And so this looks a lot like growth stocks did 4 months ago, right? Like kind of a nice breakout, big volume, persistent, big shakeout here, but holding pretty well. And then back to the energy patch, but Tidewater, I've mentioned this before. Again, some resistance up near 100. So maybe that's round number resistance, but you kind of get this first pullback here after a pretty, February, March, into April run, first pullback, not a lot of volume, so on and so forth. So those are some ideas there. In terms of names that, again, you got to be careful, but I'm just looking for things that are pulling back normally. Doesn't mean they can't implode after I stop doing this video today. Doesn't mean they can't rally pretty strongly, okay? But they're pulling back normally into support. This is Instacart, or I guess Maple Bear, sorry, but symbol's Cart. They own Instacart. New issue. It sort of changed character here. Nice buying volume, nice persistent run. And now it's futzed around here for 4 weeks as the 50 days risen. And again, just no volume here so far. So, I mean, there hasn't been a rush to the exit. It's been more all the buyers have kind of dried up. But so far, so good. How you want to handle these is up to you. Dell Technologies. Dell, what's this? Well, they have some AI server angle, plus the stock is cheap. Now, this one has had, you can see from the run from a year ago, it's had a big run. So this is a little bit, it's not early it's not the first inning, as I like to say, but it had a huge gap here, pulled back, rallied all the way back to new highs. Now it's pulling back, but still it's quote unquote only at the 25-day line. Again, do you buy it? Do you watch it? Do you nibble here? Do you buy it on the way up? That's all. I'll leave that up to you. But overall, a nice normal pullback. This one, we'll see how it closes. But American Express, we did sell this from top 10. I think it was actually up here. I think we sold it pretty well. But either way, just as full disclosure. But this is one of these names, American Express, not going to double overnight. But a nice long-term breakout here. Bunch of weeks up in a row. And it's futzed around here back to the 50-day line. And then just today, we'll see how it closes, but reacting well to its quarterly report. So that's a pretty nice chart in there. Martin Marietta is one of the big, construction aggregate firms. There's a few of them now. A couple of its peers, like VMC, I think, broke down. Yeah, below the 50-day. So MLM's the stronger one. And it's been, again, it kind of churned up here. Now it's coming down. But again, so far, pretty normal. I don't know, maybe it wants to go lower, but I'm just pointing it out. The weekly chart, again, a pretty big run from, here's your low in October, pretty smooth run in here. Now it's had a couple of bad weeks to the 10-week line. Maybe it goes lower, but overall looks pretty normal to me. Interactive Brokers, some of the financial stocks, believe it or not, have actually, the big banks like JP Morgan look terrible, but some of these other sort of nooks and crannies in the financial world look okay. Interactive Brokers, IBKR, nice breakout here, nice run. And again, effectively futzed around. I know it pulled back, went up, pulled back again, but it's held the 50-day line and it's reacting pretty well to earnings here. New relative performance peaked today as I record this, which is pretty nice. DoorDash, below the 50-day here. So this is the trick with, and these things that are pulling back. But again, we'll see how today finishes and all this, but just, I don't know, there's just no volume here. It is down. But again, let's see here, it's 11% off its high after a big, here's your big gap and kind of a pretty smooth run. So we'll see how it goes. Just a name to keep on your list here. If it finishes strong, if the market, let's just say the market has a shakeout, this is a shakeout, and everybody's, we freak out, and now we're just, boom, we just take off next week and it's all upside and earnings season is amazing. This is one of these names where, it shake the tree a little bit, and then if it can really spike back on volume. But either way, like I said, just pointing out some setups. And same thing with Natera. I've mentioned this before, NTRA. Some medical stocks look good. Now, obviously, again, the stock's gone from almost 100 down to 85 within a few days. So it doesn't feel good. But when you look at the big picture, or even the intermediate term picture, bad week, 10-week line, let's see how the stock reacts to it. And again, I mean, 1 day of volume, but very little. It's not like there's some major clue with volume. A lot of these stocks have earnings within the next couple of weeks, usually late April, early May for growth, a lot of the growth stocks. So keep an eye on that, but just highlighting that. And then before, just a couple more I just wanted to mention. This is Coupang. This was in top 10. This is a huge, almost like the Amazon of South Korea, I think, in terms of e-commerce. It does have pretty good sponsorship and liquidity. Just, big breakout here. Looked sick as of a couple months ago, but you can see the buying volume breakout on some good news last week. And then this week, impressively, has held up, okay, which is, pretty good sign. I wanted to mention On Holdings. This is the last one I'll mention today. Let me do this first. So Lulu looks terrible, right? So not that it's just athletic gear, but, that looks terrible. Nike, terrible, just awful. Okay, on, sort of in the same group, expensive, foreign, that sort of thing. But look at the weekly chart. It's been sloppy in here, but it still has this big volume clue from, I don't know, month and a half ago on earnings. It couldn't get going. It got hit, but it's just kind of hanging around the 50-day line. I wouldn't say it's a perfect pattern, but again, this is just one where if in a week or two or three or six or eight or whatever, all of a sudden you wake up one day and the stock's up here, you're going to say, hey, that looks pretty good, especially if there's some relative strength to it. So anyway, it's just kind of a longer term setup that's still in place and it's not collapsing during this market correction, which is kind of one little clue that maybe a lot of the selling's been done. Okay. Anyway, I've just sort of babbled here for 15 or 20 minutes, but we're in a correction here. Earlier, I mentioned sometimes when you get oversold really quickly, it might not be the best sign, but I'm not going to say that. We'll just see how it plays out. I would just say that whether we bounce or come back or go low or whatever, I think the message is we're going to take this day to day. And right now, all you can do is go with right now. Right now, I just think that, yes, maybe you want to nibble on this or nibble on that. But for the most part, I would be playing a little bit more focused on capital preservation than trying to make money. You don't want to sit here and if the correction got ugly or if it got really volatile, you don't want to be giving back, 90% of your gains that you earned in the last 5 months. So raise some cash, hold some cash. It's paying you a few percent to hold it anyway. Make sure stocks don't get away from you on the downside. And then just take it day to day, week by week. When things do turn up, which they will, we'll be ready. But in the meantime, you want to be patient and let this sort of selling play out. Okay, that's all the time I have for today. Thanks for watching and listening. And come by again next week for another Cabot Weekly Review.